Welcome to the Riskwiser Zone, the podcast where we dive into the latest news and trends from the world of finance and economics. I'm your host, Lewis, and I'm excited to have you join us today. We're starting off with a big story that's been making waves in the financial community. It appears that China has announced plans to relax its export restrictions on rare earth minerals, a move that could have significant implications for global trade and the tech industry. But before we dive into that, let's take a look at some other news that's been making headlines. In other news, it seems that President Trump is shifting his focus to tax cuts in an effort to boost the U.S. economy. According to reports, the Trump administration is planning to showcase new legislation at a White House event, which would include tax breaks on tips, overtime pay, and for car buyers and older people. However, Democrats are already pushing back against the proposal, calling it a giveaway to the rich and corporations that would come at the expense of Medicaid benefits. It's worth noting that this is not the first time we've seen President Trump use tax cuts as a means of stimulating economic growth. Back in 2017, his administration passed the Tax Cuts and Jobs Act, which lowered corporate tax rates and provided temporary individual tax cuts. While some argue that these cuts help boost economic growth, others claim that they primarily benefited large corporations and the wealthy. As we move forward, it will be interesting to see how this new proposal plays out and whether it will have the desired effect on the U.S. economy. We'll be keeping a close eye on developments and bringing you updates as more information becomes available. In addition to these stories, we're also seeing some significant movements in the global markets. The price of oil has been rising in recent days, driven by concerns over supply disruptions in the Middle East. Meanwhile, stocks have been experiencing a bit of a roller coaster ride, with some indices reaching new highs, while others have been experiencing decline. As always, it's essential to stay informed and up to date on the latest developments in the world of finance. That's why we're here to bring you the latest news, analysis, and insights to help you make informed decisions about your investments and stay ahead of the curve. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and investments, where market sentiments and trends can make or break your portfolio. Today, we're looking at two key stories that caught our attention. Firstly, let's talk about the Indian stock market, which has been on a roll lately. The Nifty and Sensex have been hitting new highs, and investors are bullish about the future. But what does this mean for individual stocks? According to Rahul, a market expert, some stocks like Reliance Industries and HDFC Bank are expected to continue their upward trend, while others like it, and pharma stocks might face some challenges. On the other hand, we have Hemang Jani, another market expert, who believes that cement stocks are poised for a comeback. Despite underperforming the Nifty in the last 10 years, cement companies like Ultratech and Sagar Cement are expected to do well due to industry consolidation and strong operating profits. However, it's essential to keep in mind that the monsoon season might affect volume growth in the short term. Meanwhile, defense stocks are also making headlines, with many experts predicting a significant increase in budget allocations for defense spending. Companies like Bharat Electronics and HAL are expected to benefit from this trend, as well as private players in the defense sector. However, it's crucial to remember that defense stocks can be volatile and sensitive to geopolitical developments. As we navigate these complex market trends, it's essential to stay informed and adapt to changing circumstances. Whether you're a seasoned investor or just starting out, it's crucial to do your research, diversify your portfolio, and consult with experts before making any investment decision. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've had a fantastic show so far, discussing some of the most pressing issues in the world of finance and risk management. As we wrap up today's episode, I want to bring your attention to two interesting stories that caught my eye. Firstly, Let's take a look at the U.S. bond market. Investors are fleeing long-term U.S. bond funds at an alarming rate, with net outflows reaching nearly $11 billion in the second quarter. This is largely due to concerns over America's soaring debt load and the potential for higher inflation. As we've discussed before, longer-dated bonds are particularly sensitive to inflation, which can erode the value of fixed interest payments over time. On the other hand, we have a story from the world of certificates of deposit. CDs are time deposits offered by banks with a fixed interest rate and maturity date. They are generally considered to be very low-risk investments, but they can also offer lower returns compared to other investment options. In our first story, investors are pulling out of long-term U.S. bond funds due to concerns over the country's fiscal path. This is a legitimate concern, as the national debt continues to grow and the potential for higher inflation loom. However, it's essential to remember that bonds still play a crucial role in many investment portfolios, providing a relatively stable source of income and diversification. Now, let's take a look at our second story. In India, the government has announced plans to increase the foreign investment limit in the country's bond market. This move is expected to attract more foreign investors and help to deepen the country's bond market. However, some experts are warning that this could also lead to increased volatility and risks for domestic investors. As we can see, both of these stories highlight the complexities and nuances of investing in bonds. While they can offer relatively stable returns, they also come with their own set of risks and challenges. As investors, it's essential to be aware of these risks and to carefully consider our investment options before making any decisions. In conclusion, the world of finance is constantly evolving, and it's crucial to stay informed and adapt to changing market conditions. Whether you're investing in U.S. bond funds or exploring opportunities in emerging markets, it's essential to approach your investments with caution and a clear understanding of the risks involved. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.